All right, we'll be taking a look at some markets and that's about it. So you have some markets. You have Apple, Microsoft, Amazon, Tesla, Google, Nvidia, and then the two charts below are SPY and QQQ. So basically, a bunch of stocks and two indexes. All right, and you see the labels of the stocks because I mean the name is right there, so you know what's what. The point here is really just to find support and resistance levels. Nothing more than support and resistance levels, especially the untested ones. All right, so today there was some interesting action. Well, I'll start off at the SPY and then we move on up. So we'll take a look at the SPY, and we know that the SPY went to resistance and then it went to support, did a spring and gave a little bit of a rally. So this was a really nice action today. We had similar on Google where it had a big green thrust and then pulled back. So it basically did an up thrust and went down. And take a look at Amazon. I don't know what's going on in Amazon, but I'll tell you this thing right here, where you have a thrusting green bar or whatever big bar, followed by a bunch of smaller bars, typically sets up a big move. I don't know if this is a pattern or it's codified somewhere or it isn't, but it's I don't really know if it's a don't know what it's called, but it's like you have a big bar with not one or two, but a number of inside bars. When that happens, get ready, because that's not a small move. You know, I guess you could say it looks like a triangle or something like that, but it's not. I mean, yeah, I don't know. Maybe it looks like that, but it's like it's one of the best patterns. And I'm not really a pattern person. You know, I don't really care for that, but I know what they are, and this one is a very lucrative type of pattern, because what's going on here is it's building, building, building. It's accumulating or distributing within that little range and ready to boom, break out one side or the other. Typically, you'll see this at near tops and bottoms as well, or the end of accumulation and distribution. This is what happens. It looks like a gun-like formation, and it's very visible at the end of accumulation and distribution, right before the markup and markdown phases occur. This is what happens. Anyway, so I don't want to get into too much of that. Let's take a look at the markets and observe the turning points and entries and exits and all that. So for the SPY, it went to resistance, but surprisingly, it didn't upthrust. I was looking for an upthrust, but it didn't upthrust. It looked like it was going to upthrust, but it didn't. That's the resistance. It went to resistance. It sold off. You see the big selling over here. You know, the volume is heavy and all that. Price volume action is pretty heavy. Comes up, breaks. That's the entry, and it goes down. Here is when you had an end of day short covering spring. So what happened here is that you had this climax. Now, once you have a climax near support level, you really have to start thinking of getting out. All right, because yeah, it might break through, it might, but that's big if. I mean, why not just, you have a move already, just take it and be done with it. So what happened was volume started coming in on the S&P right here. See that? That volume started coming in. Now look, it's going to support and volume started coming in. It's climaxing at support and volume is starting to come in on the up waves. So someone's buying already. What happens after that is it does a spring of support. And what happens after that is the same, you know, whoever is buying bought more here, and it does your change of behavior. So you have your climax, you have the initial buying, you have the spring, you have the change of behavior, and this is your volume off the bottom right there with very high activity, which is part of the change of behavior. So I mean, it's going to go up. This is exactly what you want to see. This bar of coming from the low here has the most activity in 33 bars. It's coming right off the low, off of support area after spring, testing that spring and turning into change of behavior. So this is basically short covering at a support level, right? So this has all the elements of a turning point in terms of having climaxes and change of behaviors and volume off the bottom and break and all of that. But the key thing to remember here is you're getting all of that at a level near the end of the day where you know they're going to cover. You know they're going to cover. Who's dumb enough to go into a support level at the end of the day and hold? Not any day trader. They want to get out. So it rallies and then it gives like a short bounce. This is a good bounce though, because you know your risk is right here. You have 1 or 2 bars of risk, test, and it gives you like almost a 3-to-1. That little bounce is a 3-to-1. By the way, if you use this low of the spring, tap 1, 2, 3, 3-to-1. So what's important to know here? That sometimes market, I mean, I prefer to break above the resistance area, but it didn't. It went almost to the resistance exact level and then sold off. Is there any indication that, I mean, the option market was breaking, so it pulled it in. Anyway, so that's the point. You have your change of behavior, biggest volume in 20 waves, biggest price action in down wave in 9 waves, has selling here, pulls back for 15 minutes, activity dies down, you have a little bit of increased activity right here, which is followed by a thrust, which is very good. Because it could mean that this little 5 here is a minor climax and this is your break. This is what's known as the back break. I'm not sure if this is it or the other one is it. But when a trend breaks, typically the support level is broken with a strong thrust. When that strong thrust occurs, that's the bar that breaks the back of the trend. So it might be this bar, the one with the 11, or it might be this bar here, the one with the 6. They both are very strong. That's like, it was called a backbreaker bar, and it breaks the back of the trend. That's how Wyckoff explained it, as breaking the back of the trend. I just call it backbreaker. But anyway, that's the idea. All right. After that, boom, 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 down, bang, right here, climactic action near support level, buying from the support level. Look at this, 104 volume. What kind of effort did they get, and what kind of reward does it get? It doesn't get crap. Look at this. For all that effort, what do you get? This little leg. And what happens after that? The change of behavior. So all this effort, 104 times, I think it was 100,000 or something like that. And what is the reward? Nothing. And then you just wait for it. It reverses. And now you know it's going to go up. And it does. This is very, very, very key. There is other indication, like this, the low test and all that, but it's really this plus this, giving no reward, followed by that blue change. That change right there is really important, because look below at the pulse of the market, it is going up, and it has a lot of pressure. So it continues to go up, meaning you're going up. So anyway, so that's what happened. Let's move on to the next. So now taking a look at Apple. Apple again, this damn thing, like, it didn't upthrust. It just went from the prior trend, which was here, rallies up here and then has a change of behavior, pull back and break. After that break has followed through, you can take the short, but the stop is a little too high. And I would prefer it to up thrust. After that, it continues to go down, 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 until it has its change of behavior here, and also goes through a false breakdown or spring against these lows. When it goes down and then goes up, taking out the two prior highs, there is an issue with the shorts. Because their selling was met by buying. How do you know? Their selling is the biggest in 18 bars and followed by the buying, which is the biggest in 33 bars. I mean, is it not obvious? It's obvious, right? So the only thing I did not like was that it didn't break the high. It should have. I would have preferred it to go up and break through, but it didn't break through. All right, let's move on to the next. This Amazon was good in that it broke. You had your climax and rejected right there. So you had your climax and you had your change of behavior. Very nice. Climactic action, retest, doesn't do anything, breaks and makes your lower low. Has a test. Once it has a test, it went down, but it didn't give any, nothing good. And this is surprising to me because I was looking for a big move down, all the way down to at least this support level, but it didn't go. So I don't know what's going on. And this market is pretty weak. Now at the same time, you're going to look at the high time frames and you see this formation where you have that thrust and that hold. So something's going on here. I think this entire range is being held for something. I don't know what. But this thing right here, this hold here there's some activity going on here, which is getting ready for a pretty big move. That's what I think. All right. Because I know they're holding it. You don't just hold it like this. And while the rest of the market is going down, you're trying to hold. There's something to that. All right. Next, this I liked. It went up here at climax. Now you see that it's in an up thrust position, right in that green bar. Pop, right up there in the up thrust position. And what happens? Selling. But there's one thing actually two things that I wasn't too crazy about. Yes, it went to the up thrust position. Yes, there was a shorting of the thrust. But this selling wave, I don't know. This may be coincidental, but typically, if it's in that position, it should break through the low. It didn't break through the low here. On the next one, it slightly broke through the low, and I get it, but I prefer for that, and that's one thing. It didn't break the low. Second, there should be high price volume indications right here, and they weren't. Probably because of this shit right here messed up everything. Otherwise, this was bigger than 1. Can't really read this because it's between sessions. 1, 2, 3, 4, 5 waves. It would have indicated that. It didn't indicate because of this, crazy action here. Anyway, and it should have gone red, but it didn't go red. Anyway, this was an up thrust selling. Here goes down. Where does it go? Support. Do you go right at the support low? No. You want to go a little bit higher. Why? Because it might not spring. It might not double bottom. It might be a higher low. A bottom, but a little bit of a higher low. And you see, that's exactly what they did. This low here is 98.40. What did I do? This low is 98.40. This low here, which ended the move, is 98.41. 1 penny higher. You see that? So that's why you don't want to use the exact low, because it could be defended. And you won't get filled. After that, price, volume comes in. You should consider getting out. because if this volume is coming in S&P, something's going on. Just consider getting out. Just consider getting out. It's not worth it. Like, you already catch a move, just get out. And now you see the big tick bars on the upside. See this right here? Boom. This 7. This print is saying the big tick bar is up. Activity on the upside. And it rallies. There we go. End of day short covering. So the idea here is not rocket science. It's just to see if there's selling pressure and buying pressure, and if they're upthrust and springs. That's it. Now that, and look over here. You have a resistance level. It breaks through resistance. Selling pressure comes in. It didn't print, which I'm pissed off about, but goes back down. Where do you get out? That's the question. You get out at a nice level, or if you get behavioral indications before that level, and the behavioral indication is right there. That's a behavioral indication that you should get out. As soon as this pulls back, exit. So the way it works is when you're exiting, right? You follow an exit plan, and your plan could be as simple as, all right, I'm gonna scale out 2R and 3R, or some at 1R, 2R, 3R, however you want to do it. As you're scaling out, if, however, you get an indication, then you just exit the position. What indication? 2 types of indication. One, change of behavior, the other is a climax. When you get that, you just exit. And besides that, you just exit at a level that you like, but on the way out, you can choose to scale out. Why? Because at any time, you will have a random distribution of how far the move goes. There will be like a bell curve, with in the middle of the highest part of that curve will be 1R. Almost everything goes to 1R. Any edge goes to 1R. All right, so you could say like the mean, median, mode would go to 1R. Then on either side of the bell curve, you will have a certain percentage that go to 2R, and then at the then 3R, and at extremes would be like 4R and above. If you catch a trend, you can do 4R. I used to do 4 and 5R all the time. In markets that have good average true range, you do 4 or 5R. Right? But in markets that are a little bit sluggish, you want to go for maximum 3R or 2.5R. So the way I view it here, if you sell here, your stop is here, and this leg is 1, 2, 3. It's about a 3R. So the idea here is to get out. You do not take this low because it might get defended. So go higher than that. That's your exit. On the way out, on the way down, you keep looking for behavioral indications. If you get a behavioral indication like this, change your behavior. You want to get out as soon as it starts going back down. Just get out. Or if you have a high price volume action at the lows, just exit. All right. It might go lower and all that, but you really don't know. It might totally reverse and you lose profits. So that's how you do it. Another one, this one here and this behavioral indication here. This is telling you that the buying waves are becoming stronger than the selling waves. Meaning demand is coming in here, demand is coming in here. Again, see very clearly, pulse of the market is increasing. Telling you what? Demand is coming into the market and it's going to turn. This demand is really just short covering though, so whatever. All right, so we covered 3 markets. I'll try to routinely do like 6 key stocks, but not all that stuff you see on YouTube where they're going through the weekly, the daily, the 4-hour, the 1 hour, the 30-minute, and this is like ridiculous. right? Because if you're a day trader, I don't see a reason to go and chart the weekly. Um, very, I don't really see. I think daily is the highest, and then the other intraday. Like, is there really a reason to do a 15 minute to chart the 15 minute? Um, it's too low, and the weekly's too high. So I don't really see it, the reason. So none of that, but just taking a look at just basic, very obvious key levels against a couple of markets. Which ones? The key ones are, the Apple, Amazon, Tesla, Google, Microsoft, and you can do Facebook, or you can do Meta, whatever it's called, or Nvidia. Probably do Nvidia instead. And those are they're in the top 10 components of the S&P. So it's excellent idea to look and be aware of those top 10 components while looking at the SPY. So that's and they have plenty of liquidity to get in and out, and even with options or whatever it is. All right, thanks, bye.